All right, everyone, we have an important show today because we're going to be looking at what happened during the FOMC. We're going to take a look at the market's reaction. And most importantly, we're going to take a look at where we see the markets going from here. We'll be looking at everything. We'll be looking at the S&P 500, the Nasdaq. We'll also look at the Dow, the dollar, the DXY, gold, silver, and Bitcoin. We're going to do all that together right now. Now, most of you are pretty much aware of what happened with the Fed, which was a lot of nothing. However, there was some important pieces that were shared. We're going to really focus in on market reaction, and I'm going to let you know what I think happens from here. One of the most important pieces of the whole press conference, one of the most important that Powell was very focused in on, that we need more stimulus from the government. He was that's the only thing he was actually clear about the whole day. If you heard a lot of coughing going on, a lot of throat clearing throughout the whole press conference, he didn't even believe what he's saying, right? What was that? Was that a lot of noise or was that any signal, right? First of all, let's focus in on what's going on the price right now. You see the S&P 500. Let me pull up some charts for you to give you some perspective before we get into the current charts here and see where we're going out of here. Starting here, it was right over here. The markets were actually peaking. This over here, you're looking at both the Dow, which was leading to the upside. Then you're looking at the Russell 2000. You're looking at the Nasdaq, which was actually here in blue, which was leading to the downside. And then you have the S&P 500. All of them were trading up. And then Powell was asked if these, basically, I'm going to sum it up. He was asked if this asset inflation continues, will there come a point in time when the Federal Reserve raises rates? And he basically said, well, everyone would have to agree upon that. The markets didn't like that initially. That's noise. Why do I say that's noise? Because the Fed can't raise rates. There's no way they could raise rates anytime soon. If you look at what the market's pricing in, you could see, well, this is the dot plot. They're projecting that it'll be to 2024 at the earliest time that they do raise rates. That's more nonsense. What about what's real? Let's see what's being priced in over here. This is the Eurodollar implied yield curve, and that is pricing in also over here. You could see in June of 2024 of when the rates would actually start rising. Okay, that is years away, right? We're talking 4 years away. We're in an environment where we're looking at ultra low interest rates. More importantly, what we're looking at is the Fed's balance sheet continue to expand. What do I mean by that? Well, a couple of things over here. Let's focus in on over here. The Fed, by the way, Powell was very clear. They're going to continue their purchases, $120 billion a month. That's $1.5 trillion a year. So you could see this balance sheet going up just without any further expansion of the balance sheet, just with the current purchases. We're talking about rising almost $1.5 trillion a year. Now, this was really well put over here by Danielle DiMartino Booth. And she said, look, what's going on over here? We have the Fed statement, Powell riddled with inconsistencies, right? Unemployment rate forecast is down. GDP forecast is down. As the average inflation target they're going to allow to run hot, it's not projected to hit 2% for years. Powell was very clear, though, and this is very important before we get into the charts. Powell was very clear that it's going to take some time in actually to turn that corner from these deflationary, right? Loss of jobs, deflationary, right? Technology, deflationary. It's going to take some time. And always go back to 2008. There was almost a period of a year before the banks started lending again, but they definitely did. That leads to the expansion. He's saying it could take a few years before we start seeing those inflationary forces. This is the key point over here. All the Fed wants is stimulus spending. He was very clear that he wants government stimulus so that they could do more QE. That's the direction we're headed in. That, my friends, that is signal. Over here, by the way, this is important as we get into this analysis today. For those that have been following the channel all year long, you know that for the majority of these moves, the vast majority of these moves, we've actually been in front of them, on top of them with precision, like sniper focus over the last over the last few weeks. Where have we been? We've been in a transition where we've been running through some consolidation at important levels, right? People are sometimes wondering why you can't predict the future. It's impossible to predict the future. If anyone tells you they can predict the future, they're lying to you. All you can do is stay on the right side of the trade when you get that clarity, and it's all about risk and trade management. It's all about risk and trade management. Over here, we have Steve Burns, a great follow on Twitter, saying trading mentors need to tell people to do nothing when nothing is the right thing to do. Some people don't want to hear that nothing's the right thing to do. They want to know what to do at all times. That's not how trading works. Confidently telling someone to do nothing is more difficult in the trading world, right? All right, let's take a look over here. Let's continue looking at some charts over here. I want to take a look at this with you. This is the FOMC rate decision. Rate statement was released. You saw the equity markets trading up. You saw the press conference begin. And then over here is what I just showed you occurring over right there is when that question was asked about whether or not they would raise rates. They're not raising rates. And you saw the markets initially didn't like it. The dollar slightly up, but basically unchanged. We're going to take a look at that in a moment. Gold also slightly up with that stronger dollar. Pay attention. We're going to look at gold and silver in just a minute over here. The Nasdaq so far sold off. We'll see. I think the Nasdaq's actually going to be the first to rise. Looking over here at the Nasdaq versus the Russell 2000. By the way, if you want to follow along, these are Bloomberg charts found on Zero Hedge. You could see over here, you could see that since September, it's been the Russell outperforming the Nasdaq. Will that continue? Do you think small caps are going to continue to outperform? I don't. All right, what else? Is there anything else I want to share? This is the dollar index. You could see that we are just continuing to consolidate and sideways. Look where we were, right? Look where we've been the last 2 days. I'm going to show you that in a second. Unravel that for you. Bitcoin was bid all day long. Bitcoin was almost the most stable asset today. Throughout all of this whipsaw and ups and downs, Bitcoin remained stable. Pay attention. Let's see over here. We have the S&P 500. Now, out of the three, and I'll start with the Nasdaq, it's actually in the worst technical shape. Down 1.9% on the session. You could see though, and I want you to watch, you could see that it's in that area of support right over here. Those that are looking to buy, I do believe I was asked also of me, right? What do I think? How do I get into there? Hold on one second. I want to show it to you. I was asked, right? Or as a response to this, what do I think that the market reaction is going to be? And I just made the comment, I want to share it with you all since other people are probably wondering as we get right now into the charts. Bitcoin is almost the most stable all day. Bullish for Bitcoin. I think the down move fades. I'm talking about the markets here. I think the down move fades, and this is going to be an opportunity to buy equities. But wait for the resumption. I'm going to show you that right now in the charts so everybody's clear. Gold and silver also going to break out soon, I believe. Fiscal stimulus is coming. Here we go. Looking at the Nasdaq, hit the hardest, but you could see it is bottomed out in that trend line support over here. Now, the reason you don't buy here, this could continue going down. This could actually continue going down and break the 11,081 support level over here, the horizontal support. It could come back in and give another touch to this trend line over here. Trend line right now is coming in at 10,973. That's all possible. You're waiting right now as we're into this trend line support. If price starts resuming off of this, I told you before, on a day like today, I would not be surprised. I almost expect that Asia and London could fade this move and equities rebound tomorrow. Nasdaq is in the worst shape so far. We're going to look at the rest. If this support holds, you start resuming up, meaning you make a higher high overnight than the previous price bar. Whether that happens during Asia, or I wouldn't buy up here into the resistance, by the way. If the Asian candle this is not going to happen. And if this did, I would not buy here into resistance, by the way. But let's say we hold here during Asia. Let's say we put up a little up price bar like this, and then London takes that higher. That's a place to lean in and buy for sure. What about on the S&P 500 before we look at the Dow, which is in the best shape? Let's look at the S&P 500. Much better shape than the Nasdaq. You see this trend line that we've been focused in on. We had a retest, and then we resumed up, and now we have another retest. That retest is occurring also, more importantly, through that trend line support over here. Again, same play as on the Nasdaq. If this overnight resumes up and start making higher high than the previous price bar, that's a buying opportunity. More stimulus is coming. I know that we're at this deadlock roadblock. Politics is being played, but more stimulus is coming. Powell was basically in the middle of the press conference. The only thing he said clear all day was that in order for this recovery to continue, we need more government stimulus. He doesn't know the details. He doesn't know when it's coming, but he knows it's coming. He was very clear about that. Watch what's going on with the Dow. The Dow is actually in the best shape today. The Dow came up into this resistance. It never held the resistance during the press conference. Sold off back pretty hard, but it's actually unchanged on the day now. Why the S&P is down 0.5%, Nasdaq's down almost 2%. Obviously in the best shape. I don't think the Dow leads on the way up. I think that the Nasdaq leads on the way up. Let's wait and watch for it. What about the dollar? The dollar did not really give us. There were some of you, right? Some in the Conquering the Markets group who were saying that they don't believe after today we're going to see any type of resolution, that we're going to remain in a trading range. Now, I was under the impression, and still am, that we're going to break out from here. Let's see what happens over the next 24 hours. The dollar did not give us any clues. This is still happening on the dollar, right? It's still happening. We're still in this area consolidating. For us to break out to the upside, we need two levels to take out, right? 93.64. Above there, that's getting really bullish. Any pullback into that and resumption off of it, I would take it into this resistance over here. I would expect that's going to break. Once we're above 94, that's when we're really looking for an extended counter trend move here on the dollar. I don't think it's going to happen. Actually. The dollar has had some trouble over the last few sessions breaking below this support. You see all those wicks. 1 wick, 2, 3, 4, 5. Every time we hit New York in the morning time, it seems that we're trading down and then New York takes it up, right? Now, what does that mean? Does that mean there's no sellers down there and perhaps now we're headed up? That it could mean that, right? If you're looking for a good book, Steve Nielsen's, I believe that's his name. If it's not, someone please correct me in the comments. But his book on candlestick charting is a great read, especially the introduction portion of it. Fascinating. You get to really understand the struggle between the bulls and bears on individual candles. At the end of the day, I think it's more for fun, but it's still a good read over here. Now, we're looking to see some type of resolution here on the dollar. It could go either way still. It could go. I noticed that gold wasn't really buying the dollar's, let's call it, moderate strength. The dollar's up today so far. The DXY is up 0.1%. Gold's up almost 0.3%. All right. I think gold and silver are about to break up to the upside. Notice how strong Bitcoin remained throughout all of this as well. What's going on over here? Not the same story that we've been in. There's no clarity. If you don't like to hear it, come back to this over here when we talked about very clearly, right? Very clearly, confidently telling someone to do nothing is difficult in the trading world. Trading mentors need to tell people to do nothing when nothing is the right thing to do. We're still looking for that clarity. It has not happened yet. We could still go either way. Let's keep watch of it. What about gold? Again, gold is up with that stronger than expected dollar. It remains 1976 is the level that we need to clear to the upside, right? Once we do, that's when you're looking to lean in, and that could take us pretty quickly to not only test the all-time high on gold, but make new all-time highs. That's the direction I'm leaning in. Wait for confirmation. You are still consolidating. On the downside over here, don't buy any false breakdown. You have to still trade below 1900 in order, at that point, any swing traders get neutral, step aside. Step aside, wait. right? Obviously, I'm not telling anyone to sell their physical gold, silver, or Bitcoin. By the way, anyone wondering, I don't have stops on the physical gold, physical silver, physical Bitcoin, right? That's stored overseas, and that's where it is. That stays that way. Now, when you're talking about the paper markets over here, right? If you break 1900, get neutral. We're gonna monitor that together, and we're gonna look right down towards 1800, 1750, places to reestablish positions. What about what's going on silver today? Same thing. You can see that we're still in the triangle. We haven't broken out. There's no edge. Always watch your risk. Always watch your downside. That's $26 on silver. You lose 26. At that point, you got to get neutral. We got to monitor it, look for lower levels. I think we break out to the upside. I think before long, silver's making new yearly highs. What about what's going on with Bitcoin? Bitcoin held up pretty much the strongest today out of everything. Was bid all day. Wasn't really affected by any of the swings during the FOMC. And again, I'm targeting right here towards 11,300 on Bitcoin, right? And not that I don't think we're going higher, but I think that as we run into that level, maybe we consolidate for a little while before breaking back up over there, right? So that's what we're looking at today. We didn't get the clarity that I was looking for at all. Nevertheless, I was very clear that the only position I'm looking for right now, and overnight bullish, any resumption out of this, any fade during Asian in London of these moves today is the opportunity to buy. I maintain that bullish posture very strongly, stronger than even yesterday now. Right now, the FOMC is out of the way. And that's the direction, even though it doesn't look like it today, that I think we're going. And again, I think the Nasdaq is actually going to be the one that leads to the upside. We'll see. That's what's great about these videos, whether it's the live streams, whether it's the published videos in it's all on tape. You could go back and watch the ones on tape and see that before, I'm putting it out there, been on the right side, hope to continue to be on the right side. Do not jump until you get that confirmation. Always wait for that confirmation. That's the difference between taking a high probability trade and just gambling. This is not about gambling. This is about managing risk. That's it for today. I'll see you all in the morning. Looking forward to tomorrow's session after getting now the London session out of the way. See what tomorrow brings. We'll navigate it together tomorrow. Listen, if you're still here, please go ahead, smash that like button. By the way, if you're new, welcome. And if you're not, welcome back.